Scott Bessent, US Treasury Secretary, has said that the housing market is effectively in a recession because of high interest rates and weakened activities. And how does that affect you in your real estate investing career? What do you think, Mitch? Are we in a housing recession right now? Are we going into a housing recession?
Well, I'm also curious, what does it mean? Like, I'm reading right now. Housing recession is a significant downturn in the housing market characterized by a slowdown in activity, like a drop in new home construction. I think that's probably true. Fewer sales. I think we've been locked up for a long time. A lot of people are low interest, right? But in a higher interest environment, so they don't want to sell. Declining home prices. We've also talked about that multiple times. So, that's the quick and dirty definition. I mean, I think that like anytime you have this period of low interest rates, a lot of people buy houses or investment properties or whatever, right? And they're locked into that. And then you move into high interest rate, like you're just going to hold. So I think that what's that?
I got a house that's on a 30-year note on 2.2% interest.
Look. First of all, the guy that you mentioned
falls off.
I don't even know who that guy is. I don't even know if you pronounced his name.
I probably messed up his last name.
Look, people let, these definitions and headlines, like we're in a recession. Is this a recession? Like,
they say dictate what they do. I'm just saying, but it could be a recession though.
A housing recession, not an overall market recession. The economist?
It could be a recession. That said, I always go to like in real estate, there's opportunity in any market. Most of the people that are talking about recessions aren't investing in real estate anyway. So like if this is a real estate recession, a slowdown of some sort, it also may be the greatest opportunity for you to get into real estate. So it's like, just don't let a headline determine like, it's interesting. I watched people in 2008 who were in 30-year fixed mortgages, meaning like their payment did not change. Look on Zillow that their payment or that their home was worth less, and they sold their home out of emotion.
You on an owner, and it was a good deal. It was a good opportunity for the definition.
Travis and Patrick Dissent are nervous about some kind of recession doesn't mean was it Patrick?
Right. Who?
Paul Dissent. I don't know who it was.
No, Steve Dissent.
Doesn't matter. So.
I'll tell you why I'm not
Mike
nervous.
Dissent thinks that we have a recession, and Travis is scared. So, but you have to be.
I mean, he's the US Treasury Secretary. He's not like some guy we talked to under the bridge.
Look, but
who's this asshole? Who cares?
He might as well be. Look,
oh God, that's funny.
He might as well be because look, these are all talking points. But like when you get down to the basics of like cash flow, real estate investing, like we do, and a lot of our listeners do. Look. The value of a property can go up and down on paper, but if you're buying, for cash flow, you're buying cash flow first. I saw this like 2009, 10, 11, 12, 13. I'm just buying as much real estate as I possibly can. And so many people, isn't that risky? Prices are going down, values are going down. And I'm going, yeah, but the cash flow is staying the same or going up. And so it's, you got to think like, what is your investment philosophy? Why are you buying real estate to begin with? And does a recession actually impact you as much as you may emotionally allow it to? So I think, a sound investor is going to look at the market as a whole, but also holistically and go, is this an opportunity for me to buy more real estate? Is this an opportunity to build my portfolio? Or am I going to let fear, put me on the sidelines listening to Mark Dennis or whatever?
Or there's Mark Dennis, or there are 3 talking heads on YouTube. Like, look, here's the deal. It's the economists define it basically. I mean, as fewer homes are being built, fewer homes are being sold, builders, lenders, and homeowners lose confidence. Okay, so you own a house. You look at Zillow. Your equity's been vaporized. Half of it's gone. To your point, Gabe, you're emotional. You sell it to a guy that's buying at 50% off or 25% off or 30% off. And that person just holds, or you just hold the damn thing and you go out and buy more real estate, like you're saying, because you're getting better deals because you're playing on the emotions of the market. And that's same with stocks. Like we have a guy in our pod in our mastermind that's like, if you're 30% down, that doesn't mean you sell, you hold and you go buy more stuff, right? Because there's more stuff on sale.
Well, listen, I mean, I think Sean Desant probably has a real point, and he's probably a smart guy. But the point, here's my point, is
who is this guy?
The emotion you feel when you go into a recession should be the exact.
You can be excited. John, LeBron James, why is he saying this? What does he got?
Well, the emotion you feel when you hear recession is like most people are scared, which I'm like, okay, great. You got to get over that. And I think this is what Gabe's saying. You actually need to flip that. I'm more excited when I hear recession, when I hear pain, when I hear fear, not for people going through pain, but the reality is it turns into a buyer's market. There's more opportunity for me. I'm not like plugged into this like I'm scared of it or fearful. Like for me, there's more opportunity when there's fear in the market. More people are willing to negotiate contracts or do seller contracts, or like, I think there's more flexibility when there's fear. When it's going up into the right, man, sellers are going to be like, this is what I want. And there's a bunch of people in line. And we're seeing it right now in the commercial world, because the commercial in the world and the residential world, they're not the same, but they're cousins. And we're seeing that same sort of like flexibility. We're putting together awesome deals. So this news, the only thing it says to me, is that we have more and more opportunity in the future.
I also think that, it's the old adage, like when people get fearful, there's an opportunity. I don't like the term, like when people are fearful, get greedy. But I do think, regardless of what Michelle Obama says about the recession,
the housing recession. It's funny, I didn't know she said anything.
No, I do think as people are, fearful and they make emotional decisions, it really is an opportunity, for a new or experienced investor to come in. And I've also watched experienced investors, let their emotions take over for, sound investment decisions. And so even those that are experienced investors, make sure, that you're sticking to the fundamentals, that you're not just, selling off property out of fear of the unknown, but you're actually sticking to the principles in your own investment philosophy, and you're making decisions that make sense to you fundamentally. In any market, there's going to be winners and losers. I hope that our listeners take advantage of the opportunities that are in front of them. And some of that starts with building relationships, finding a tribe, getting around people that are living the life and doing the thing that you want to do. And, for us, cash flow real estate's allowed us to do that. And I think there's an opportunity yesterday, today, and tomorrow.
But yeah, take the emotions out of it. I mean, we know guys in our tribe, you talk about a tribe, that have made hundreds of millions of dollars in the run-up. After 2008, they were buying large portfolios of single family homes. And if this is the case, if there is a housing recession, if you're going to see a 20, 30, 40% dip in some markets, you believe in the fundamentals of that market, you could get in on a sale, get into these homes, wait for the values to come back up because it's real estate. They're not making more. Now, all of a sudden, you've got a lot of equity. You can tap that equity. You can go make moves. The same correlation as me. Like I own multifamily properties in Oklahoma City, and I have these brokers that are giving these broker opinion of values. So we think this is what it'll transact at. It's millions less than I would want it to be right now. And I could freak out and I could go liquidate it and actually lock in those losses of $2 million like you're talking about, Gabe. Or I can just hold those assets because they cash flow and I bought on sound fundamentals, low debt, low leverage. Sit on those assets, let them ride for the next 2, 3, 4 years. But I should be doing exactly what Mitch and I are doing at KDA Capital. We should be going out and buying more properties and actually going on the offensive. So I think anybody that's been in the real estate investing game and been through multiple cycles like the three of us have, we would look at these headlines that Michelle Obama or Billy Bob or Billy Idol, whoever said that, we would be looking at these headlines with optimism. I do. I look at them with optimism. It's
Billy Idol. Is this what year is this? 1980? I think he meant Billie Eilish. Get with the times.
I think Billy Idol needs to stick to music because now that he's making predictions about the market, it seems weird to me. But here's the thing: is the housing crisis also, when you look at, and I love to see patterns, right? Because you can see sort of like patterns. You can see what happens when the first domino tips over. If we have a housing crisis and housing prices go down, people spend less money when their houses are worth less because it's psychology. You're like, dude, I feel like I'm personally worth less. I don't want to go spend, or I don't have access to a HELOC now. Like, right? When you feel poor, you spend less. Well, we are a consumer economy. So a lot of jobs are based on consumerism. So I think you could see housing crisis, prices go down, less spending. You could see more and more job losses, not only AI, which we've talked about, but also just because there's less spending, which creates more and more forced sales, which then fuels the housing crisis. We saw it in 2008. We've seen it multiple times throughout history. In the 80s, we had a big crash. So you could see this thing sort of go in a snowball. And if you're on the right side of the equation, you can pick up assets at, pennies on the dollar. So, but if you're scared and you're wrapped up in it, a lot of people freeze and get paralysis, and then they wait until the market's too hot again to go buy. I think you just got to realize like these things go through cycles. It doesn't always last this same way, but if this thing does kick off, we could see something that's, I don't know. I don't think it'll be like '08, but I think it could be pretty impactful.
And then just buy on the fundamentals, like Gabe said. I mean, make sure you're not being emotional. Don't be emotional one way or the other when it comes to buying real estate. Don't get emotional and liquidate your property because Zillow says it's worth less, or because some broker says your apartment building's worth less. But if you buy in the fundamentals now, also don't get too optimistic. We saw a lot of these guys do that in the run-up. They think the interest rates are going to stay the same forever. They're underwriting 0% vacancy or very low vacancy. They're underwriting 30% expense ratios on a Class C multifamily apartment building. Like, understand the fundamentals. Even now, if you go into this, just take the emotions out of it. What's my income? What are my expenses? What's my debt service? Do I have more than enough to cover my debt service? What are my levers to grow the equity in that property? We like forced appreciation to commercial assets, because then even if it is a recession and you're getting good deals, if you underwrite well, you could hold on to those assets through the dips and the peaks. And that's what you're talking about.
The other thing too, when I look at this housing market specifically, you've had a massive amount of owners that would love to sold in the last couple of years, but they really couldn't according to the numbers. So they're like, look, my loan's at 3 or 4%. Now I got to go get a 6 or 7 or 8% loan. So they hold off. Well, we know what happens when people hold off from life events. In other words, they hold off only for so long, and then we'll see a whole flood. The market will correct itself. So in other words, you have a low amount of people moving. There's a low supply. That will translate to a high supply. And you can watch human behavior. I mean, during COVID, they told us to all go inside for a couple months. Within a couple months, we had millions of people protesting in the streets. And there's reasons behind that I won't get into, but literally outside their homes in this, like the pendulum swings and it always swings. So we've had a time with very low supply, and I think we could face a time with very high supply, because now you're bringing the interest rates down closer to the point where a seller will say, look, I can sell this home and I can move. High supply would actually indicate a housing recession. I think we could be seeing that.